Every year, a sum of money quietly disappears from your CPF, and most homeowners don't even notice. And when I ask them what is it for, 9 out of 10 can't even give me a straight answer. Some will say insurance, right? But here's the real question. If you pass away, does CPF really clear your mortgage automatically? Does that mean your spouse never has to pay another cent for the flat? And if your home is already fully paid, do you still get compensated? What if you don't die, but suffer an accident or illnesses that leave you unable to work? Can you still claim then? Most people assume the answer is yes, but the truth may shock you. Yes, I'm talking about Home Protection Scheme, HPS, a mortgage reducing insurance for HDB flat. But wait, what does mortgage reducing insurance even mean? In this video, I will share what HPS actually covers, what it doesn't, and whether can you opt in or opt out. And for private property owners, since HPS doesn't apply to you, what can you do to protect your home and your loved ones? Hi, I'm Kenneth. I started my career as a police officer, but for the last 16 years, I have been a real estate agent and also a husband and a father of 2. Like many families, we carry a mortgage, and I know firsthand the importance of planning so that our loved ones never lose their home. Now, what exactly does CPF mean when they call HPS a mortgage reducing insurance? And here's the truth. HPS doesn't insure your flat at market rate. It insures only your outstanding housing loan. And that means the payout string over time. And here's how it works in practice. If your outstanding loan is 800k, when you pass on, the payout can be up to 800k. Let's say you have a 25 years home loan, and after paying for the past 24 years, the balance is down to 10,000. Then the payout is just 10,000. And that's why it's called mortgage reducing insurance. As your loan string, so does your protection, until it eventually reaches zero. The longer you pay, the less coverage remains. And this is also why HPS premiums are generally more affordable than standard terms or life insurance policy. And here's the key point. Insurance doesn't bend to common sense. It pays strictly according to the terms in the contract. Take this example, unlicensed ride hiring. In Singapore, private cars cannot be used for hire unless licensed by LTA. If a driver takes passengers without a proper license and insurance, the vehicle policy becomes invalid for that trip. And if an accident happens, the insurer won't pay because the terms were breached. And that's why LTA is strict. And among these, safety risk and unfair competitions against licensed PHV and taxi drivers who follow the rules. Now back to HPS. It is not a jackpot payout for your family. It has one main purpose: to make sure that your loved ones don't lose their home because of an unpaid mortgage. And here's what you need to know about eligibility for HPS. If you are using CPF to pay for your HDB loan, HPS isn't optional, it is compulsory. CPS set it that way so families won't lose their home if something happens to the main breadwinner.
The HPS is an insurance scheme that protects CPF members and their loved ones from losing their HDB flats in the event of the member's death, terminal illness, or total permanent disability.
But HPS applies only to HDB flat. It doesn't cover executive condominium, condo, or landed properties. If you own a private property, you will need to get a similar policy from private insurer instead. Coverage under HPS doesn't last forever. It ends once your loan is fully paid or when you turn 65, whichever comes first. Another important detail is that HPS only covers your share of the loan, and you get to decide how much of it to insure. Take a couple with 800k outstanding loan as an example. If each chooses 50% of the coverage, then each is insured for 400k. If one spouse passes away, HPS will clear that half, but the surviving spouse still has to service the remaining 400k home loan. If both had opted for 100% coverage instead, then the full 800k would be paid off when either passes, but the premium will also be higher. Eligibility also depends on health. You must be in reasonably good health to be approved.
Today, members are covered at a standard premium rate if they are assessed to be generally in good health, even if they have pre-existing health conditions.
CPF may require medical checkup, and serious pre-existing condition can mean your application is declined or accepted only with exclusion. And here's the key legal point. All applications and coverage are subject to CPF board acceptance of your health declaration or medical report. Without the approval, you are not insured.
The vast majority of applications are approved. However, around 1.3% or about 1,400 HPS applicants are rejected annually due to pre-existing health conditions. Now, while we cannot cover all pre-existing health conditions, we will expand the HPS from mid-2025 to cover those with certain pre-existing conditions that are not so severe.
Finally, if you are not eligible for HPS or you prefer to use your own coverage, you can apply for an exemption. But CPF will only grant it if your private insurance such as term plan or whole life plans cover the outstanding loan for death, terminal illnesses or permanent disability all the way until your loan ends or until age 65, whichever comes first. Simple rules but absolutely crucial to understand. Many people assume everything is automatically covered, but in reality, HPS is very precise about who's eligible and how much your loan is protected. At its heart, the Home Protection Scheme or HPS serves as a single critical purpose to protect your family home when you are no longer able to. If you pass away, are diagnosed with terminal illnesses or suffer total permanent disability, CPF pay off your remaining loan directly to HDB or to the bank if you're on bank loan up to your insured amount. That means your loved ones keep the flat without having to scramble to clear the loan. HPS is designed to be low cost and effortless. Premiums are automatically deducted once a year from your CPF OA, so you never have to remember a separate payment. HPS may seem quiet and unknown, but it could be one of the most valuable protection, allowing your family to stay in their home when they need security most. By the way, if you already got a term plan, life insurance or even mortgage reducing policy that fully covers your loan, you can apply to be exempted from HPS. Just submit your application by CPF with proof that your coverage meets HPS requirements. We've all heard stories of people passing away too soon, a sudden illness, an accident, or something completely unexpected. And when that happens, the family is left with grief and also with burden of mortgage. And that's the harsh reality. Our home can either be our greatest comfort or family's biggest financial burden. By the way, I'm not an insurance agent, I'm just a proud homeowner with a large mortgage, a wife and 2 kids. Like many of you, I want to make sure no matter what happens, my family won't lose their home. For HDB owners, you have HPS automatically, but for private owners, you need to look at private insurance. Personally, I don't go for mortgage reducing cover. I use term and life insurance instead because it doesn't reduce over time. The payout goes directly to my family. They can decide how best to use it and whether for the house or for other needs. And of course, the premium is also higher, but it works well for me. Anyway, I'm sharing my thoughts as a homeowner, not a personal advice. Please speak to CPF officer on HPS or your insurance agent or mortgage reducing insurance. Your plan may look different, but that's fine. What matters is you plan. Don't leave everything to fate. Knowledge is power and preparation is love. Let me know your take if you prefer mortgage reducing insurance or term or life plans. My name is Kenneth and I'll see you on the next video.